Hi there, good afternoon. You've tuned in to ET Now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. But it's not looking like a good afternoon coming in for the global markets, not just Indian markets, but for global markets as a whole. Remember, overnight you had Fitch that went ahead and downgraded the US's ratings to AA plus from AAA, and post that all we saw was a sea of red across Asian markets. You had the Indian markets that were holding on all this while, but now we've actually given up those support levels. We've slipped below the 19,500 mark when it comes to the Nifty. We are now trading at the day's lowest point, that is for the Nifty index. We'll take a look at what Nifty Bank also is doing at this point in time, because Nifty Bank also was actually underperforming the benchmark indices last time I checked. And right now, if you look at the Nifty Bank, yes, it is a tad bit of underperformance coming in from Nifty Bank, 1.5% downtick. All the sectoral indices are in the negative territory, be it auto, be it pharma. All of them are pretty much sulking in today's trading session. A lot of stocks to talk about. And yes, Nifty has fallen in excess of 200 points from the day's highest point. So yes, a weak session coming in for Indian markets. For Europe markets also, they opened with a cut of excess of 1%. US futures are also declining in trade. That's the way how the setup is looking like as of now, Winnie. A weak day for us indeed.
A weekday for us indeed, and yes, 19,500 below that mark. So keeping an eye out on what the Nifty is going to do in the next couple of hours as well. But there are some individual movers in trade as well, and which are those stocks either on the technicals or on back of news flows. So let's bring on board Sumeet Mulchhandani on the technical run trial from the research team. Today we are joined by Harsh as well as Ashesha. Very good afternoon to all three of you all. Good afternoon to you as well, Cheryl. And let me, as always, start with the first stock that is in focus today. We're going to talk about Sirma SGS. This is in focus on the back of their numbers as well as an acquisition also which the company has made as well. When you look at the numbers, despite that growth that we've seen coming in terms of the revenues, the consumer business is what led the growth for the company. 59% uptick in terms of revenue growth. Despite that, we're seeing a fall coming in on the stock price of the company as well. When you look at it in terms of the operating performance, also quite strong over there as well. 64% uptick in terms of the EBITDA, while the margins of the company have come in at 9.5% versus 9.2%. Also, the company has forayed into the electronic medical device segment with the acquisition of 51% stake in JDHL, and that is one that we're keeping an eye out on as well. But when you look at it, nothing exciting. The street has not given this a thumbs up. But what the management had to say about their numbers, we spoke to J.S. Gujral, the MD of Sirma SGS, in terms of how is their outlook looking like for the company in terms of going forward, and what is the margin that they're expecting to maintain going forward as well. So let's go across and listen into that.
We have been maintaining double-digit EBITDA. That's been our sustained call right from last year. And I think if the healthcare business comes up to its expected level, we should be there at double-digit EBITDA. I had said that we'll grow at a rate better than the industry. Industry is expected to grow at about 35%. So I think you can derive the figures. I would not like to commit a forward-looking statement. But if the industry grows at 35%, we would definitely grow at the industry rate or more than the industry rate. So we did about 2,000 crores last year. So that will give you an indication of what the organic growth would be. The JDHL acquisition would be additional to the top line and the bottom line.
All right, that is Sirma SGS. That's the management take coming in. And if you look at the other stock that is actually sulking in trade, has to be Chola Finance, because that particular counter came out with its numbers. But the problem was that it actually missed the analyst estimates. So on back of that, you saw the stock actually fall as much as 5%. It's recovered a tad bit from the day's lowest point. Nevertheless, it's seeing declines of excess of about 3% as we speak. The third consecutive day of losses coming in for Chola. Remember, a lot of brokerages have come out and actually cut their ratings for Chola. Also, one of them is CLSA, which has downgraded the stock. Apart from CLSA, you have Jefferies also that's come out with a note. And what they're saying is the company actually missed the adjusted PAT estimates by 9%. This was hurt by lower net income net interest income and the higher provisions, while Motilal is also saying that the company missed the past estimates by about 18% due to NIM compression and elevated credit costs. So that is one of the reasons why you saw a sharp decline come in on the Chola stock price. It has missed the analyst estimates, but nevertheless, we actually spoke to the management of Chola Finance on ET Now, who believes that the cost of funds have peaked for the company and actually will ease going ahead. What else did he have to say on the NIMs? Listen in.
See, our expectation is the cost of funds, the peak of the cycle has been, we have already faced it. From here, unless something drastically different happens, because still there are uncertainties, whether with regard to the Fed rates or with regard to our own inflation, etc. But for those, events, I expect cost of funds to moderate going forward. The cost of funds would be at similar levels in Q2, and in Q3, Q4, we should see some reduction. Parallelly, the vehicle finance book, which has the largest fixed rate book, would also be slowly changing its interest yield, as an overall book, with the newer book coming in at higher yields. So that would make it a better yield, producing product, which would thereby improve the NIM in the coming quarters. Right now, we are in the cusp of where the old book is still a large part of the vehicle finance book, which is having a lower yield, while the cost of fund impact has happened quite rapidly. So thereby there has been little time to sort of adjust the yields on the vehicle finance book. In the rest of the portfolios, we already increased the rates because these are floating rate books.
Let's move on to the first stock on the technicals. And Sumeet, you picked out Finolex Industries for us today. How are the charts looking like for this one? Last 1 month, also the company has actually picked up a lot of pace in terms of gains that we're seeing there. 17% return in just the last 1 month. Now, what is the upside that one could actually see coming in for Finolex Industries? Because they have kept that momentum of green all through the year as well.
Hi, good afternoon to all. So yes, still the chart is good and one can accumulate the dips. Currently the market is in red, but there are the fewer stocks which can be accumulated in these dips. So one of them is the Finolex pipe. In the morning also it was in the green territory. It has lose some profit because of the market, but it looks attractive still. Current market price is 204. So if anybody wants to add, or if anybody is already holding, keep a trailing stop loss of 189, and we are expecting the target of 220 and 245 also.
All right, so that's the take coming in on Finolex Industries. But Shesha, coming to you, Tata Chemicals is a counter that is in focus in today's trading session. But surprisingly, this one is not in focus because of earnings.
Well, yes, it is not in focus on the back of its earnings, but it is on the back of revision in soda ash prices that the company has undertaken. It has gone ahead and reduced soda ash prices by as much as 1,800 rupees per metric ton. And remember, this is the fourth price cut that the company has taken on a year-to-date basis, financial year-to-date basis. And prices have been cut cumulatively to the tune of 20%. Remember, China prices have also gone down. They've fallen from $350 per ton to about 250. So on account of global demand concerns, global price reduction and reduction in raw material prices that the industry has seen, prices have been cut, because of which the stock is declining in trade today. In fact, as of now, the stock is down nearly 3.5%. 1,036 is where Tata Chemicals is.
Okay. Let's keep an eye out on Tata Chemicals. But let's move on and talk about Sansera Engineering. And Harsha, this one is buzzing in trade today. Is it on the back of its numbers?
Well, yes, absolutely, Vinny. On the back of stronger than expected numbers, you're seeing revenue which is up 24% on a year-on-year basis. So very strong revenue growth. Some of these EPC companies doing quite well there. You're also seeing PAT up 28% on the back of better EBITDA. So what's happened is EBITDA has gone up 26% year-on-year. Margins have gone up a wee bit, 30 basis points higher, from that 17.1% mark to 17.4%. So definitely a positive there as well. And what you're therefore seeing is that on a weekday of trade, the stock is up 2%. So revenue higher, EBITDA margins getting much better, and profitability, of course, surging better than net profit. So definitely a thumbs up with regard to the numbers from the Q1 set for Sansera.
All right, moving on. Sumit, let's talk about a stock that we rarely spoken on this particular show, and that is Wankey's. Where do you see this one headed? Because surprisingly, when I see his YTD performance, not too bad. It's at least posted gains of about 5% in this inflationary environment as well. Where do you see Wankey's headed from here on now?
After a huge fall, it took a support near the 1400 levels. But after that also, if you will see, it has gradually given the up move. But a slow up move is there. And the stock has gained the highest gain with the volume on 17th of July. So that range is coming for a breakout again. So I will just utilize this upside for the target of 2430. That is nearly 20% from the current market price. So one can keep a stop loss of 1840 here.
Okay, keep an eye out on those levels for Wankey's India. But let's move on and talk about RailTel. Now today, when you're looking at it, the stock has actually given up all the morning gains that we saw coming in at one point of time. It was trading at a 52-week high, but right now with the markets, RailTel also has given up gains. What as an announcement came in was that a company has won an order worth around 79 crores, and this order is mainly that they've received it from the Center of Railway Information Systems, and this is for the procurement of cloud infrastructure and for the next generation passenger reservation systems of Indian Railways, and that's for around 79 crores. So let's keep an eye out on RailTel. As of now, given up all those morning gains, trading at the day's lowest point.
All right, that's RailTel for you. But Sumeet, Affle India, where is this one headed on the charts to you? Do you think that this is an attractive bet to take? We see a lot of them actually having an interest in this particular counter. But if you look at for the last 6 months, only 4% gains.
On the weekly and the daily time frame, it has given a breakout of the trend line along with the cup and handle breakout. So just wait for the yesterday's high price to close above. Today also it has made the same high as per the yesterday. So I will just wait here. So it is a conditional buy. So closing above the 1160 looks good for next 3 to 6 month delivery. Target can be 1360 and 1500. Stop loss one can maintain is nearby the 1020 levels.
All right, moving on, let's shift focus and let's talk about Asiana Housing, because earlier in the day, this particular counter saw an uptick in excess of about 3%, and this sort of an uptick actually the company saw because after it entered into an investment framework agreement with IFC, that's International Finance Corporation. No doubt the stock has given up all of its morning gains, but has seen mild declines about 0.7%. IFC has actually committed to invest about 113 crore rupees, which can be increased up to about 225 crore rupees in the company. This represents approximately 40% of the total investment, while Asiana will be looking to invest about 60% of the capital, that's 169 crore rupees, which can be increased up to 338 crore rupees. And this sort of an investment is on mid-income residential projects that will be developed by Asiana Housing across Jaipur, Gurgaon, as well as Pune and Chennai. So on back of that investment coming in from IFC, you've seen Asiana Housing actually see an uptick of as much as 3%, right now given up all of its gain in line with what the markets are doing today.
Let's move on and talk about stock number 10 for today, and that is Dalmia Bharat. And Sumit, when you look at the charts for this one, it's not been anything exciting, and especially in that last 1 month, when you look at it 1 2 months, it managed to reach about this 2,200 levels, and then it gave up, and now today currently is trading at around 1,970 levels. Dalmia Bharat, what is the view on this one? What is the target price that you're keeping on this one?
We would recommend it as a buy because as per the technicals, it is a perfect reversal candidate. If you will draw a trend line, it has always taken the support of the channel, and this time also it has taken the support of the channel where the 200 moving average is also supporting. So type of double bottom also. Yesterday also the stock gave a good candle formation. So we are expecting some bulls and for the more upside. Current market price is around 1970. Keep a stop loss of 1870 for the target of 2150 and 2270.
All right, so that's the take coming in on Dalmia Bharat. But moving on, let's talk about Triveni Turbine. Then Ashesha, how is this particular counter looking like? I'm sorry, why is this particular counter in focus in today's trading session? Because of earnings?
Well, yes, it is in focus on the back of its results and very strong set of numbers, international operations and After sales services what aided first quarter performance this time around. Demand continues to remain strong. Order inflows were also very strong in the quarter gone by. Revenue saw an uptick of 45% on a year-on-year basis. Margins meanwhile expanded a tad bit. They came in at 18.8%. International order booking continues to remain strong and product demand also continues to remain strong. As far as order book position is concerned, consolidated order book now stands at about 1410 crores and first quarter order inflows stood at 450 crores, which is an uptick of 27% on a year-on-year basis. So very strong set of numbers, and hence the stock, it is off the highest point of the day, but despite that, holding on with gains of over 1%.
Yes, but let's also listen into what the management had to say in terms of their commentary for the margins going forward as well. Listen in.
We will continue with our track record of growth, and that at the same time as looking at preserving margins, which we've been quite consistent with in terms of saying that we like to maintain a PBT margin in excess of 20%, which is something that we've exhibited for the last several years. We've seen the market in India grow by about 35% in terms of domestic order placement. We don't see that continuing for the end of the year, despite the fact that our inquiry book has grown by about 56%. But we believe that the market will grow by about 25 to 30%. We do foresee not only us maintaining our profitability, but as well as enhancing it because of a higher share of aftermarket as well as export in the quarters to come. The business is asset light. We have asset turns in excess of 5, so that allows us to have really sweat our assets. But more than that, of course, we will be putting more capex in certain areas which are strategic to our growth, especially in the internationalization of our business. But despite that, we do not see any problem in our return metrics.
All right, let's shift focus and let's talk about Bharat Electronics. And Sumit, there was a wave actually that caught the Indian markets. Everyone wanted to only look at defense counters, defense plays, and also railway. Let's add that also to it. Bharat Electronics also was no less. Everyone actually wanted to go and catch this particular counter. 6 months, 33% return. Do you think that it is still worthwhile to go ahead and catch this one?
Sorry, but we would just advise to book a little bit here, as we have got a perfect inverted hammer with a follow-up today, and today's the selling is more powerful. So we would just advise to book here, because booking profit is always better than looking profit. So there is one more support of 124. If we are getting the close below the 124, then we are expecting the next level to touch is 118 and 113.
Booking profits is better than looking profits, and that's the word coming in for PEL from Sumit. But let's move on and talk about Tracxn Technologies. And Harsh, why is this one in focus today, and what's the stock doing?
Well, again, on the back of numbers, Vinny, and you can see that right from off the bat, the numbers have been extremely poor. You're looking at revenue, which is actually down 2.5%+ on a sequential basis. You're seeing a decline with regard to revenues itself. EBITDA has in fact slipped into a loss of 2 lakh rupees versus a gain of around 1 crore or thereabouts, same time last quarter. So Q4 saw around a 1 crore odd EBITDA profit. Now around 2 lakh odd loss with regard to where EBITDA is concerned, and you're also seeing profit after tax decline from the 25 crore mark, nearly 24.5 crore, all the way down to 69 lakh rupees. So it's a tough one, Vinny, with regard to the overall set. You're looking at a 7.5% decline on the stock as well.
All right, so that's Tracxn Technologies declining about 7.5% as we speak, but that's not the only thing that is declining in trade today. Let's take a look at what the markets are doing. We've given up 19,450 as well. When it comes to the Nifty, the fall is only accelerating when it comes to Indian benchmark indices. 235 off the day's highest point coming in for the Nifty as we speak. Let's take a look actually at the global screen. Let me take you through what the global markets are doing in order to understand better, is that the impact that we're seeing in Indian markets as well, and that indeed that's what is transpiring. If you look at DAX, that's trading lower by about 1.6% as we speak. You have FTSE that's lower by about 1.7%. Also, you have CAC also that is declining about 1.5%. So yes, the fall in the European markets has only accelerated. That's not the right kind of a code that we are getting in for FTSE. But yes, CAC is down about 1.5%. as we speak. DAX is down about 1.6%, and the US futures, that one also has seen a sharper knock right now, 2.5%, or I beg your pardon, 250 points decline coming in for Dow futures, while S&P futures are down 1%. You have Nasdaq futures that are down 1.3%. So yes, Vinny, that sort of downfall is reflecting in Indian markets. We are also off the day's highest point, rather 220 points from the day's highest point.
Absolutely. There's clear pressures coming across the globe. European markets also are opening weak. Futures are also indicating a weakness in the US markets as well.
Right.
And Indian markets, like you can see, that fall is just continuing. And as of now, Nifty is trading at the day's lowest point. But let's move on and talk about the next stock on the technicals. And Sumit, you've picked out Webel Global for us. What are the charts indicating for this one? I've not heard many technical analysts actually talk about Webel Global. So it's going to be interesting to know, Sumit, what your call is on this one, and what is the target price that you're keeping for Webel Global now?
Actually, in last 6 to 8 months, it has given a breakout actually. So consolidation breakout and still looking good. But I will just wait for the safe entry. If anybody is aggressive, just enter at the current market price. But if any safe player is this, just wait for the 360 levels. Above the 360 level, we are expecting a 10 to 20% upside more from here. So one can just keep a small stop loss of 335. Current market price is 350, and look for the target of 400 and 440.
Let's move on and talk about Hero MotoCorp and why is this one in focus. Yes, there were news flows around the ED searches also. Now that has been completed is what we are understanding. But there's one more news flow that has come in today is that, they've actually set the prices for Harley Davidson, and the prices that they are setting for this Harley Davidson X440 is at around 2,39,500. Also, they're saying that the 10,500 crore price hike is going to be applicable across all variants. That's going to be starting from the 3rd of August till the 3rd of August. They are available at the current price. Post that they will be at the new price. So let's keep an eye out on that one today. Hero MotoCorp is just sulking in trade and down almost 4% as we speak, trading at the day's lowest point.
All right, moving on then, that is on Hero MotoCorp and the new pricing that they have actually unveiled coming in for Harley Davidson. But Sumit, coming to you, Century Textiles, how is this one looking on the charts to you?
Again, one more candidate for the profit booking. As per the technicals, it has formed a perfect star formation, that is an evening star, and it is a negative for the stock. So we would just advise here to book profit. 10220 close below can drag down till the levels of 970 and 930 also. So advise to book profit here.
All right, so our advice to book profits in Century Textiles is what Sumit has to say. But let's shift focus and let's talk about not one but two counters that are in focus in today's trading session. One is definitely Sangi Industries, the other one Ambuja Cements. Ambuja Cements also in focus on back of its earnings, but also related to this particular development. You have Sangi Industries that hit a 5-year high in today's trading session. It has reached the highest level since May 22nd, 2018. Fourth consecutive day of gains coming in for Sangi Industries, locked in the upper circle of about 5%. And why is that? Because you have news reports that are indicating that Ambuja Cements is all set to buy majority stake in Sangi Industries. We remember the fact that Shree Cement was also in talks to acquire Sangi Industries, but that talk kind of failed. You had a lot of cement companies that were in fray to go ahead and buy majority stake in Sangi Industries. But what reports are suggesting now, and this is all source-based information for now, is the fact that Ambuja Cement is likely to buy that majority stake in Sangi Industries. We had Ambuja Cement actually report its earnings also today. It was a healthy set of numbers coming in for Ambuja Cement when you look at EBITDA per ton levels as well. But yes, the stock has actually staged a good rebound from the day's lowest point, that's Ambuja Cements, and we're all awaiting for that announcement on what happens to Sangi Industries. So that's why both of these counters are in focus in today's trading session, Vinny.
Absolutely, surely keeping an eye out on both these stocks. And Sumit, you picked out Sangi Industries for us on the charts as well. You know, there's a news flow based move that is surely coming in the stock, but what is your view on the technicals and charts? Now, should one actually start booking out their profits? Last 6 months, we've already seen around a 80% return coming in for Sangi Industries.
Many a time it's been said that technical knows everything. So in the chart also, 2 weeks prior, it has given a breakout as per the cup and handle on the weekly time frame. So it was already shown at the levels of 90. Current market price is 100 and stock is in upper circuit from last 2 days. So, but we are expecting a good up move till the levels of 125 and 140. So keep a stop loss of 84 here.
All right, so that's the take coming in on Sangi Industries. But on that note, we'll slip into a break on this edition of Market Fatafat with the note that the markets are only slipping, only 4 Nifty stocks in the positive territory. We'll come back, talk more on markets as well as on stocks in focus. Don't go anywhere.